Hello, my name's David Baruffi. I'm the Managing Director of Blueprint Wealth. We're the financial planning company that's aligned to your corporate superannuation fund. In this short video, I'd like to cover off two topics. Firstly, the current state of the investment markets, and secondly, I'd like to introduce you to some basic financial planning goals that I use with all of my clients. We've seen in March and April this year a significant downturn in the markets. This is basically just an end-of-cycle correction. Markets move in cycles. Cycles normally run from 7 to 10 years. This cycle ran for 12 years. We saw in the end of 2019 very good market returns, which is usually a pretty good indication that we're coming to the end of a cycle. All we needed was a trigger, and in this case the trigger was a COVID-19 pandemic shutdown. Since then we've seen markets return quite strongly as investors look ahead and can see that government stimulus and lower interest rates are going to provide a good environment for significant growth in the future. The downturn would have an effect on your superannuation balances, but this is nothing to be particularly concerned about because over your working life, the superannuation investments will go through various cycles. However, if you're less than 10 to 12 years out from retirement, it's probably time to have a look at your superannuation fund to make sure that the investment mix isn't too aggressive. The second thing I want to talk to you about is setting some basic financial planning goals that I use with all of my clients. And they're fairly straightforward. The first one is to have enough money to retire on by the time you're 65. The second one is to be debt-free by the time you're 55. And the third one is to be adequately insured when you start a family. Let me go into detail. The fundamental plans on retirement come down to having enough money to retire comfortably. And people ask me, how much money do I need to retire on? That varies from person to person, from circumstance to circumstance. If you look at how much money you need to retire on, it will depend upon how much money you spend to facilitate your basic living. The best starting point is to take your current expenses and remove from those expenses things that you don't expect to incur when you're retired. For example, mortgages and bringing up kids. That will give you a basic budget, which is your starting point, and from there you can work back to calculate how much money you're going to need to accumulate between now and retirement. The second goal I use for clients is to be debt-free by the time you're 55. The reason for that is the chances of your work life being interrupted by ill health or redundancy increases with age. If you look at trauma insurance, for example, trauma insurance pays you a lump sum if you develop a cancer or have a heart attack. The premiums for those insurances increase dramatically past the age of 55. If you're in a situation whereby you are debt-free, you can cope with such interruptions quite easily. We do pro bono work for the Cancer Council, and the first question that I'm asked by people who have been diagnosed with cancer is, how am I going to pay my mortgage? If you're debt-free, that's not an issue. Bearing in mind that between the ages of 55 to 65, you should be at the peak of your career and earning your largest amounts of money that you've earned over your lifestyle. At the same time, your expenses should be reducing. Children moving out of home, mortgages getting paid off, etc. If you're in a position whereby you are debt-free and earning good money, you can do two things. You can build extra funds for retirement, and you can spend that money on giving yourself those goals that you have set early on in life on travel, entertainment, lifestyle. It is easier to do that if there's no mortgage involved. The third thing is, when you start a family, make sure you're adequately insured. If you're single and you get sick and can't work, then you can adjust your lifestyle accordingly. It's very difficult to adjust the family's lifestyle if you can't work because you're injured or ill. These are the fundamental goals I use with all my clients. Once we have these goals under control, then we can move on to more detailed financial planning. I hope this has been of help. Thank you.